Alright, let's get started. Welcome to the video. This is a walkthrough guide on how to use the Canadian Financial Planning Spreadsheet. That being said, let's get started. Okay, first of all, names are important, so you can input your name right here. Each person can have like both their main job and their side job, and the names chosen for this walkthrough guide is Joey and Sally. Joey is making $40 an hour, working 40 hours a week. Sally is working two minimum wage jobs, so 16.55. Working both 20 hours for both of those. Right, typically you get 14 days off for 2 weeks for holiday time off, so you put in those. As you can see, it's reduced the weeks worked from 52 to 50. Keep note of that. Then you have Joey's Etsy shop. This is just like any additional income. Let's just say you have like a business on the side or something like that, where you own property and it's generating you money through tenants and whatnot. So you can put in your earning frequency. You can either do weekly, bi-weekly, or monthly. Yeah, so monthly, let's just say that we're making an extra $250 a month, so that's equal to $3,000 a week, yearly. Down here you have the graph, which can showcase the percentage split of the income. So Joey's taking up 68.9%. Joey's shop is making 2.6%. Sally's main job and side job are taking up 14.3%. So that's just your breakdown there. Then we have our monthly and our yearly. We're going to be taking a look at the yearly because it has a little bit more information. So let's see. We have our gross income. So Joey's gross income is 68K, and Sally is 60. What are these numbers I'm saying? 34K. So we have our 86 and our 34K. Right. So Joey's paying 16K in taxes and roughly 5,000 in CPP and employment insurance, EI. The taxes and the CPP and the EI are done individually for both Joey and Sally. These values are then subtracted from the gross income to get our net income of this. These values are then summed up for a combined net income after tax of 94K, and you can see the same for monthly. You have your gross income, you have net income, and then you have your combined net income. Alrighty, so going down, we have our fixed expenses. We have our rent, our food, our internet. You get the idea. You can change the billing frequency between weekly, bi-weekly, or monthly. Then you can put your costs here for each of those on whatever basis you want. For curiosity's sake, we're just going to change the food from 250 monthly to, let's say, bi-weekly. You can see that the values are updated. So yeah, you can see that. I'm going to change the weekly. So that's 1,000, 13K. Anyways, change that back. Then we have the summation of our monthly costs. So Joey and Sally need to make a minimum $5,000 monthly, and yearly they need to make a minimum $60K. Okay, next we have our savings. So this part was split off into two. So we have a section for Joey and we have a section for Sally, and then you can put your category, I guess: investments, emergency savings goals, or your RRSP. So Joey in this case is doing $50 monthly for investments. That's equivalent to $600 a year. And for emergency, he's only putting in $25 monthly. It's $300 a year. And Sally did differently, so she's only doing $30 monthly, $20 monthly for emergency. And then you can see the values here, or the yearly values here. Okay, and both Joey and Sally agreed upon $50 a month for their RRSP. So that's that. And then again, we have the combined monthly and yearly of these values. So that's $2,700 yearly and $225 monthly. That's going towards savings. Right. So as you can see, we have our needs, wants, and savings. I'm pretty sure that you people have heard of the 50-30-20 rule, and whatever rule that you want, you could try to adhere to that by changing the values over here to adhere to those rules of thumb. With the amount of money that we have right now and the living expenses or fixed expenses, we'll probably need to make more money to decrease this value to that 50%. And then our wants are 11.6%, and savings, that was done here. That's only roughly 2.86% of our income that we brought in. Moving on, we have our little financial plan breakdown. So again, you can see our 94K is here, and then we have 60K of expenses, 27 are savings, and we are paying 20K in taxes. And again, you can find that same information just like in plain sight right here. Then you have our fixed percentage, for fixed expenses, percentage, tax, savings, and leftover income. You can see that here. And then you can see our money going out monthly and our yearly. And then we can also see the extra money left over monthly and yearly also. Okay, that's that. Moving on, we have our second spreadsheet, which is a little bit daunting, but don't get too scared. I will try to simplify this as much as possible. So, first off, this is Canada. Yeah, provincial and federal. So, provincial tax brackets, they're right here. So, first tax bracket is from 0 to 51K at 5.05%. And then our next bracket, so anything above this value and in between this value, is taxed at 9.15%. So you might ask, where do I find these values? Well, you have to look it up. Well, actually, I already have the link for you, so you can just go over to the right and then you can click the first link, income tax rates for individuals. Click that. Scroll down, you'll see the 2024 federal income tax rates. Then you can see the information right here. So you basically just take this information and you put it into right here. So the federal 15% less than 55K. This is between 0 and 55K at 15%. Just fill in the information or update it whenever you need to. So that's for federal, and now you want to scroll down a little bit to find the 2024 provincial, or whatever year you're using this to be more accurate. First tax bracket is 5.05% on taxable income that is less than 51K. Remember that information. So that's between 0 and the 51K at 5.05%. Then you just take all this information again, like how you did with the federal, and you just stick it over here for the ones that are specific to provincial. Next, you can see that Joey's income where Joey's gross income and Sally's gross income are here. You can then see that the taxable income is then calculated or reduced from this to this, and this is the money that's being taxed and put into the tax brackets as we predefined up here. So $2,600 of Joey's money is taxed for the first tax bracket and $2,700 for the next tax bracket. And then you can see the total taxes that Joey would have to pay, and then you can see after deductions. So that's for provincial, and then the same thing is for the federal. So $8,400 for the first tax bracket and $5,000, roughly $5,000 for the next tax bracket. That's a total tax of $13,500 in total taxes. And then you can see your after deductions, and then you can see the combined federal taxes for both provincial and federal taxes, and then you can see after deductions again, and then you can also see your effective tax rate. Same thing applies to Sally. Yeah, for Sally. And then for your gross income, I kind of forget what's kind of goes into the taxable income, but you can see that your CPP and your employment insurance, this, whatever the summation of this minus your gross income and I think some other information, that's basically, this is contributing to your taxable income, or your reduction from your gross income to your taxable income. Just a little tidbit. Also in this section here, you can change your vacation pay. So default's 4%, change that to like, I don't know, 6%, and then the value changes automatically. I'll put that back. And then also for your deductions come from both your basic personal amount. So we'll just look into how you calculate that. So basic personal amount, it's separate for provincial and federal. For Ontario, for the Ontario provincial, it's this value. I don't think I have a link for that right now. I might add it in later. If not, just look it up online. It's this value times the lowest tax bracket percentage rate. So it'd be this value times the 5.05% to get our 626 tax credit. And same thing for federal. You take this value and you go to your lowest tax bracket, which is 15%. So 15% times this value equals your roughly 2,400. And then to calculate your Canadian pension plan and your employment insurance, we'll have to go to those links over here. So I'll just open up the CPP. So this is for 2024 still. Sorry about that. Canadian pension plan. Yeah, let's just go in order, I guess. So this value here, you can find this value right here. So that's your maximum annual pensionable earnings. Take this value, put it here. Then your basic exemption amount's 3,500. I'm going to take that 3,500, stick it here. This is still for the Canadian pension plan. And then you want to find the percentage rate, which is right here, 5.95%, which is employee and employer contribution limit. So take this value, stick it right here, and then that'll calculate your maximum annual employee and employer contribution. That is a mouthful. So this value here should correspond to this value, and then you basically do the same thing for your employment insurance. So I don't have the link open, so I'll actually go back over here and look for 2024. So maximum annual insurable earnings is this value, so you take that value and you stick it right here in the higher threshold column. Then yeah, it doesn't have like a lower threshold or basic exemption value, so we just leave that empty. And then you want to find the percentage rate, so that would be just called rate percentage, so 1.66. Take that, stick it right here, and you end up with this annual contribution limit. It might be a little bit confusing or whatnot, but you could probably also just like find this value directly and just like stick it in here, because that's all this is doing. It's just calculating these two values. Moving on, we have our tax credits. So if you have any tax credits of any of these, you could probably apply that. Tax credits are for reducing the amount of taxes you owe. You have refundable and non-refundable. Refundable, you get money back or whatever. Non-refundable, it just reduces your tax credit to 0, which is what this section is for. Then you have your deductions. Yeah, as you can see, you already have your RRSP, which is a deduction. And then go to your drop-down menu. You can have you can choose any one of these for your deductions. Deductions reduce your amount of taxable income. So technically speaking, if you have enough deductions, you could probably drop a tax bracket and save money by not paying taxes on that extra income or whatever. Yeah, I don't know if there's anything else I really need to explain. Oh, right, over here you can update your drop-down menu. So as you can see, tax credits and your deductions, you can update or change these or whatever you want. And you'll see the changes here. For the tax credits and deductions, you'll have to look up how to calculate those, or how much of a tax credit or deduction you can get, and just put your values here. And you have your section for both Joey or Sally. Lower and higher thresholds, you can set those. No calculations are going to be done based off of these, so this is just for you to keep in mind. Same thing for this entire section. No calculations are being done on this, so just put in these values and keep in mind not to exceed those contribution limits. And then you have your notes, just so you can keep in check with all that stuff. And then for your quick overview, you can see your gross income, your total tax, your CPP and EI, how much you're putting towards that, and then you can see your net income. And then also you can see your effective tax rate. So I think that more or less covers what's going on in the spreadsheet. Let me know if there's anything that is unclear. Yeah, just let me know. Thanks for watching. I hope you understood everything. Have a good one.